Hey everybody, still here. Daily Market Pulse for Wednesday, February 12th, 2014, sorry. Okay, so mixed action today. Primarily it was essentially the Nasdaq that actually stalled. So we saw mixed and mixed as well as volume. So the Nasdaq as a result ends up with a distribution day. So ding ding ding. Been talking about this. To me it just seemed very odd, very strange that the markets were where they were. It just is not making sense. But the bulls are the bulls. They'll do what they want to do. They've been doing it all along, including last year. So you just don't get in the way. But this now becomes, it's obviously only one distribution day. But um, we have seen in times things can rack up in a hurry. So not saying it will, just saying you always have to kind of pay attention to what's going on. So anyway, having a distribution day this quick after the uptrend is resumed is always very suspicious. So anyway, with that said, we'll get to the charts here. Okay, Dow Jones comes into this area and then literally just stalls itself. So it's got a bearish hot-me. So we had a bullish hot-me at the bottom when the market's reversed, right? But of course, we had a big decline at that point. Of course, now we've got the complete opposite. We've got a pretty good green ascent into levels beyond levels, actually, quite frankly, that I would have ever thought we would get to. Usually a 38.2 or 50% retracement is plenty, but we got moving averages here. And so who knows? We'll see. But there's a bearish hottomy. That means that the buyers are slowing down. Doesn't mean a huge sell signal. It just means things have slowed down. Maybe the sellers have stopped. And I do say maybe. So let's move on. If they do, then we're looking at the window below that occurred this morning or today. I'm sorry, yesterday, pardon me, on Tuesday as a first area or target, maybe 15.7. Similar action with the S&P, a little bit of it's not quite the dichotomy simply because it's not really within the body of yesterday, so it's just near the high, but it is a spinning top. And when you see this, it's pretty much neutral. It's a profit-taking day. It's an indecision. It's an undecided kind of day as well. Not confused so much, but certainly undecided. Now, keep in mind the moving averages. We've talked about this as well. 20th cross below the 50. The 50 is flat. So you'd expect some kind of a pullback retracement. So where would that be? Back to the gold lines, maybe to the 20, maybe even deeper than that. Maybe back to the 50% retracement, or near 1800 in other words. So the Nasdaq ends up in a similar fashion, but with a green real body, closing higher, but high volume in an oversold state. So you get high volume where there's virtually no price action. That's called a stalling day. Stalling day is considered a distribution day. Distribution days become significant, especially when you get, in this case, when you're right at or near a window. Potential resistance up here. So if I draw that line across here, you're going to see, come on now, there, right there. So it's close. It's not quite there, but it's close, right? So maybe it's done already. Don't know, but it's just coming through a former pivot area. It's stalling a little bit. We'll see what that means. Is it just a slight pause before a refresh to the upside, or is it a refresh to the downside? Okay, TSX, for our TSX friends, of course, we have a shooting star up near the 14,000 range where the resistance was as well. Didn't quite get there, and it may not either. But if it does, you keep an eye on 14,000 regardless. But again, multiple days to the upside. We said at some point we may start to see a reversal, some kind of a pullback. We had a similar candle 2 days ago on Monday, and it went right on through again and higher. So it doesn't, could just as easily when you see something like that, it's just maybe an intraday retracement, an intraday reset before it goes higher again. So now we saw that on Monday. We saw another one a little bit yesterday, that upper shadow yesterday, then another one today. So that's 3 consecutive days where we're showing kind of an end of day weakness. It's okay the first day, the second day may not be quite as okay. Certainly by the third day it becomes usually less okay. We'll see what happens though. If it has another push, again, pay close attention to what happens at 14,000 and the resistance that occurred on those 4 consecutive candles that we saw mid-January that were creating a little bit of resistance there at 14,000. Okay, DAX doing the exact same thing. I think we're going to see similar themes across. I'm going to go quickly right over to the US dollar, Canadian dollar as well. That's kind of holding ground here at the 618 so far. That's holding. I'm still looking for the possibility of a bounce. If not, then you're looking for a short back toward the 50%. But right now, it's holding reasonably well. Treasuries faded a little bit. The green candle you're seeing now is after hours, so it faded a little bit, but it's still in the 618, and this is where I'm thinking it might actually hold. It had that lower shadow from Friday. It came into that same area again today and now holding for the time being. That coincides really well with previous lows, or at least tests of that same area before. So we'll see if that's the case. Rising 50 is still there as well. Rising 20 still exists as well. The Japanese yen has a similar appearance, but it's overall weaker, but into the 20. There's your little bounce as well. So if that's the case, we're going to see the markets probably falter at least a little bit. Gold, I'm going to flip through these a little bit more rapidly than usual. Gold went higher, right? Went higher today and then now holding reasonably well for the moment. So I was talking about breaking out and getting over the 1280 and closing. If it did that, the likelihood it goes higher. The 8's above the 20, the 20's above the 50. The 50 is starting to roll up, roll to the upside. That only strengthens the current intermediate trend and overall trends in general. Silver has still been lagging. It still remains below its resistance area of 2050. And there may be a moment in time when this thing just starts to really go. That's today's candle, so it's got a little bit of room still, but that's, you look at the moving averages, they're just now crossing over. This could take some, so depending on how you read your charts, take a look at maybe SLV or something else that may have a good strong appearance, and it might be to your advantage. Crude came into the 101 area yesterday, and then, or actually that is today. We made a new high today, and then it's faded just a little bit since that time. So 101 we knew. We had Doji, and essentially now a spinning top, almost a shooting star. And so it's looking like resistance is intact here. It's looking for a pullback toward the 8 moving average at a minimum, maybe down to 98.50. So watch for that. Otherwise, a breakout above 101, then you're going long still to 103. We can look at natural gas because we did not look at that yesterday. So natural gas yesterday did bounce. I was saying it could come back down to that goal line, which was the last pivot area, maybe slightly higher to the 618, and it kind of went to the 50% essentially. Yeah, 50%. That's correct. Right around 460. Bounced reasonably well yesterday, right back to the moving averages and holding for now. It gapped up today on the open, so there's clearly some buyers stepping in. Let's take a look at the small caps. Small caps we know is risk on, and this is my suspicion the whole time. Below moving averages still. If this is true, if risk is really on, then they should be buying. This should be further accelerated, further ahead. Not the case. Still below moving averages, and the moving averages, of course, crossing with a dead cross here. So plus you're at a pivot area. So it's very interesting to see exactly what's going on here. Right here, there's another essentially high with a series of lows, and you're at 114. Could still swipe into that, but essentially you're into a resistance area potentially here with an overbought state. And the VIX, well, the VIX showed a slight bounce today, very, very slight, at a place where we thought it could. The window is right there from back on, which date is that? That's back on the 24th. The moving averages are here, particularly the 50, which the 50 should be one of the strongest for support levels to hold. There's a pivot area here, the 200 moving averages here as well. So plenty of reasons for this to bounce and probably bounce back towards 16 to 1650. We'll see. So that's your market pulse here.